Hey everyone, ready for another deep dive. Today we're tackling something that might make some folks a little uncomfortable. We're talking about long-term care, you know, how to plan for those costs and all.
Yeah, a topic a lot of people maybe would rather avoid thinking about, but it's really important.
It is, and we found this fascinating article from the Scluff Financial Group. They've got this blog called Long-Term Care University,
Okay.
and they posted this article in October. It asks a pretty interesting question, like, could you use a basic term life insurance policy as a way to, like, get to a plan that helps cover future long-term care needs? I thought that was intriguing.
That's a very interesting approach. I'm curious to hear more about it.
Yeah, me too. And one thing that really caught my eye right away was this stat. They say 7 out of 10 people over the age of 65 will need some type of long-term care.
Wow, 7 out of 10.
Yeah.
That's a much higher probability than many other things we typically insure against, like a major car accident or a house fire.
Right, exactly. Make you think, huh. And it's not just about how likely it is, it's also about the potential cost. The article mentions that the median monthly cost for a nursing home is almost $10,000. Assisted living is over $5,000 a month. Even just home care averages over $6,000. So those are some big numbers.
Absolutely. And imagine those costs potentially doubling in the next 20 years. That's what the article projects.
Yeah.
It paints a pretty stark picture of what long-term care could cost and emphasizes the need for some kind of financial plan to deal with it.
Yeah.
They really stress the importance of insurance as a way to manage this risk rather than trying to just pay for it out of pocket, which could end up being incredibly expensive.
Yeah, no kidding. So this idea of using term life insurance as a stepping stone, how does that even work? I always think of life insurance as, something that pays out when you die, not for covering long-term care.
Right, right. A lot of people might not be ready to jump into a permanent life insurance policy right away,
Mhm.
the kind that has built-in long-term care benefits. But this article proposes a two-step approach. Start with a term life insurance policy now, add a couple of specific riders, and then later on you can convert it to a permanent policy that does include those long-term care benefits.
Oh, okay, so that's the stepping stone part. I got it. So why would someone choose this two-step approach instead of just going straight for the permanent policy from the start? What's the advantage?
Well, term life insurance is usually much more affordable than permanent life insurance, especially if you're younger and in good health. You get guaranteed premiums for a set period of time, like let's say 30 years. And because it's just temporary coverage, it tends to be less expensive than a permanent policy that would cover you for your entire life.
Okay, I see. But how does a term life policy that's supposed to pay out when you die, how does that turn into something that covers long-term care? That's where these, what'd you call them, these riders come in.
Exactly. The article talks about two specific riders,
Okay.
the extended conversion rider and the chronic illness conversion rider.
Okay, a lot of words. Break those down for me. What exactly is this extended conversion thing?
So basically, it gives you the option to convert your term policy into a permanent one. But here's the key. You can do it any time during the term of that policy, not just within a specific window. And when you convert, you get to keep your original health rating from when you first bought the term policy.
Ah, okay. So even if your health changes, you're locked in at that earlier, healthier rate. That's smart.
Exactly. It's like a safety net in case your health takes a downturn.
Makes sense. Now, what about the other rider, the chronic illness one? That's the one that brings in the long-term care aspect, right?
Exactly. That's the rider that lets you add the long-term care benefits when you convert your term policy into a permanent one.
Okay. So how sick do you have to be to actually trigger those benefits? What are the specific conditions?
Good question. The article actually lays out those qualifying conditions, and they're pretty much in line with what you'd see in a typical long-term care insurance policy. You would need to require help with at least two activities of daily living.
Activities of daily living. What does that mean exactly?
Sure, so we're talking about things like bathing, dressing, eating, using the toilet, things like that. You'd need help with at least two of those, and that need would have to be expected to last for at least 90 days. Or you could qualify if you need a lot of supervision because of significant cognitive impairment. So those are the general triggers for those benefits.
Makes sense. And I'm assuming these benefits are tax-free, right? Like most long-term care benefits.
Yes, the article highlights that as a big advantage.
Yeah.
And you know what? The chronic illness conversion rider, it actually becomes even more valuable if your health does get worse over time. Let's say you wait and your health declines. You might still be able to buy a new policy, but that new policy might not even give you the option to add that care rider.
Oh, wow. I see. So you might lose that opportunity. Okay. So we've talked about these two rider, but I'm still trying to wrap my head around why this whole approach is supposed to be so appealing.
Well, the article points to a couple of key reasons. First, it's about flexibility. You buy this more affordable coverage while you're younger and healthier, and then you have the option to upgrade later on when your needs change or your health changes. Second, it's about peace of mind. It's like having a backup plan just in case your health takes a turn for the worse. You're not locked into a permanent policy right away if you're not sure if you'll even need it.
Right, right. Like you're hedging your bets a bit. It's like a backup for your backup plan. And that peace of mind, I can definitely see the value in that. But I'm guessing there must be some downsides too, or at least some things you really need to think about before you go this route, right?
Oh, absolutely. Every financial strategy comes with its own trade-offs, and we'll dig into those potential downsides right after this.
So we've talked about how using term life insurance as like a starting point for long-term care coverage can be kind of clever. Like you get that flexibility and that peace of mind. But I'm sure there's another side to this coin, right? What are some of the potential downsides? What should people watch out for?
Well, you're right to think about that. Even though term life insurance is pretty affordable at first, when you convert it to a permanent policy with those long-term care benefits, that's probably going to mean a big jump in your premiums.
Yeah, that makes sense. You're basically getting more coverage, so of course it's going to cost more. What else should people be thinking about?
One thing is just the complexity. Understanding these riders and how conversion works, and how the long-term care benefits actually function within a life insurance policy. It can be a lot to get your head around. This is definitely a situation where talking to a qualified financial advisor would be a smart move.
For sure. It sounds like you really got to do your homework, maybe even get some expert advice to make sure this strategy actually fits your own personal situation. What about the timing of the conversion? Is there like a best time to switch from term to permanent?
That's a really good question. And honestly, the answer depends on a lot of individual factors, your own specific circumstances. The article suggests thinking about conversion. When a change in your health might make it hard to get a new policy or make the premiums really expensive. That extended conversion rider we talked about, that protects you from being denied coverage because of health problems.
Yeah.
But that doesn't mean you should wait till the last minute.
Right. So it's about finding that balance, using the rider if your health changes, but also not waiting so long that the premiums become too much to handle.
Exactly. And it's important to remember, even with that chronic illness rider, there's no guarantee you'll actually end up needing long-term care. So you could end up paying for a benefit you never even use.
Yeah, that's a risk with any insurance, right? It's
Yeah.
all about paying for that safety net. So how should someone weigh all these different pros and cons to decide if this term life insurance approach is the right move for them? What are the key things to consider?
I think it boils down to a few main things. First of all, your financial situation. Can you actually afford the premiums, not only for the term policy now, but also for the potential increase when you convert it later on?
Yeah, that's a big one. I'm assuming age plays a role too. Like the younger you are, the better.
Definitely.
Right.
The younger and healthier you are when you buy that term policy, the lower those initial premiums will be.
Okay. What about family history? Does that factor in at all?
For sure. If you've got a family history of needing long-term care, or if you think you might need care yourself because of your health, then this approach might make more sense.
So this isn't like a one-size-fits-all solution. It really comes down to individual circumstances and planning things out carefully.
Absolutely. That's why getting advice from a financial advisor is so important. They can help you figure out your specific needs and goals and your risk tolerance. They can see if this strategy makes sense for your overall financial picture.
Right. It's not something to just jump into without thinking. But what about other options? Are there other ways to plan for long-term care besides using this term life insurance as a stepping stone?
Oh, there are definitely other options out there. Traditional long-term care insurance is one, and then there are those hybrid policies that combine life insurance and long-term care benefits right from the start. Each approach has its own pros and cons, and we'll dive into those in the last part of our deep dive.
Okay, we're back, and we're ready to wrap up this deep dive into using term life insurance as a way to, kind of set yourself up for long-term care coverage. We talked about some of the pros and cons of that approach, but you mentioned there are other ways to plan for long-term care as well. What are those other options, and how do they compare?
Yeah, let's take a look at those. So first, we've got traditional long-term care insurance. That's pretty much what it sounds like. It's designed to cover the costs of long-term care services, like nursing home care, assisted living, in-home care.
Got it. So that's a more direct approach, not like bundling it with life insurance or anything.
Exactly. And, that could be a good thing or a bad thing. It really depends on what you need and what's important to you.
Okay. I'm interested to hear more about this. What are some of the pluses and minuses of traditional long-term care insurance?
Well, one of the good things is that these policies usually give you a lot more choices in terms of coverage. Like you can often customize it to include specific services, choose the length of the benefit period, even add protection against inflation. So you have a lot more flexibility there compared to those riders we were talking about.
Sounds pretty flexible, but there's got to be a downside, right?
The biggest one is probably the cost. The premiums for traditional long-term care insurance. They can be pretty steep, especially if you're buying it when you're older or if you already have some health issues. Plus, there's always that risk that you'll pay those premiums for years and years and never end up needing the coverage. And if that happens, you don't get any of that money back.
Ah, so it's kind of a gamble, like any insurance, I guess. You're paying for that safety net, for that protection against something that might happen.
Yeah, exactly. Now, another option we haven't talked about much is hybrid policies. Those are the ones that combine life insurance and long-term care benefits all in one package.
Right, right. So it's similar to what we were discussing with term life insurance and the riders, but it's all rolled into one policy from the start.
Yep, that's the basic idea. And there are a few different types of these hybrid policies. Some have a death benefit that gets smaller as you use the long-term care benefits. Others have separate funds for long-term care that don't affect the death benefit at all.
Okay, so more options, more things to think about. What's good about going the hybrid route?
Well, hybrid policies can give you that sense of security, knowing you've got coverage for both long-term care and death, all in one policy. And unlike traditional long-term care insurance, if you never need long-term care, your beneficiaries still get that death benefit.
Yeah, that's a nice backup to have. What are the potential drawbacks? What should people be aware of?
Well, they do tend to be more expensive than just plain term life insurance, even with those riders. And with some hybrid policies, the investment part can be complicated. Different levels of risk, different potential returns. You really have to understand the details of the policy and how it fits into your overall financial goals and how much risk you're comfortable with.
Sounds like there's a lot to unpack there. So we've looked at all these different options, using term life insurance as a stepping stone, traditional long-term care insurance, hybrid policies. What's the takeaway? How should someone decide which one is right for them?
Honestly, there's no easy answer. The best approach really depends on you, your finances, your health, your family history, how much risk you're willing to take. There's no magic formula that works for everyone when it comes to planning for long-term care.
Okay, so it's all about figuring out what makes sense for your own situation. What's the next step for our listeners who are trying to sort all this out?
The most important thing is to actually plan for long-term care. Don't just ignore it. It's a real possibility. So look into your options, do your research, and talk to a financial advisor, someone who can help you create a plan that fits your needs and goals.
Great advice. This deep dive has been so helpful. I feel like I understand a lot more about the different ways to plan for long-term care, the good and the bad of each approach.
I'm glad we could shed some light on it.
And to our listeners, thanks for joining us. We hope you keep learning about this topic and really think about what matters most to you when you're making decisions about how to plan for your future. Remember, knowledge is power. And the more you know, the better prepared you'll be to make smart choices. Until next time.